Good morning and welcome to Speaking of Gas. This is a change in our day and time, and you never know, that could change again. Life changes, other people change my schedule. But currently, Speaking of Gas is going to be scheduled to air on Thursday mornings at 9 a.m. And next week, because someone changed my schedule, I think it'll be a recorded version that you can view directly on YouTube when you tune in. So this is being recorded, and the broadcasts are available on YouTube. When you have the link, you can come in live, you can participate with questions and answers, but you can view those later on YouTube. So this is a weekly look at what matters to you, the owners of oil and gas rights in Pennsylvania. And it's brought to you by the GasWellGuru, and I am about educating and advocating for the owner of oil and gas rights in Pennsylvania. So today I have a rerun of a topic that we'll cover every month, and that is the monthly production report. And then I'm also going to talk about the depletion allowance. There are a couple of bills out there in the legislature that have the potential to affect how you can deduct this, so I'm going to talk a little bit about that. So first of all, we're going to talk about the monthly production report that came out. It looks like I closed the tab. Let me get it back up here again. The production report that came out in November 15th, and it's for September production. And that's what I'm going to talk about today. Now, this presentation I prepared for a meeting that we held, POGLA and Houston Harbaugh held in Southwest Pennsylvania. And so it's centered on Southwest Pennsylvania, but we'll explain that also as I go. So first of all, I have a map up here of unconventional wells in the state. This was pulled off from DEP's website last week. This is an interactive map that you can easily pull up and work with on the DEP website. And when you pull up this map, if everything's working correctly, and it usually is, then it populates automatically with active unconventional wells. So these are Utica, Burkett, Marcellus wells throughout the footprint of the shale, which you can clearly see here. We know the Allegheny Front goes down through here, and so we're not really seeing production in outside of those areas. Like I said, it is an interactive map, so you can click on any of these wells and pull up a wealth of information, mostly. Certainly if they were drilled since 2015, there's a lot available. Prior to that, somewhat more limited, but you still can get identification. So looking at this September production report, which I'm going to show next, for the meeting last week, I looked at the top 100 unconventional wells and sorted them, ranked them by million cubic feet produced per day. Always the Northeast and the Southwest regions top the list. And, you know, from looking at that map, that's no surprise, because we have a core area up here in Susquehanna, Bradford, Tioga, Lycoming counties. And then we have a core area down here in Greene, Washington. We're seeing more activity up here in Butler and Armstrong, Westmoreland counties. In September, there were 12,883 active wells, and 11,254 of those produced 604,000 MCF for that month. And it's interesting to note that the top 100, top 1% of those wells produced about 10% of that production number, 59 million MCF in the month. And of course, as I've mentioned before, this unconventional production report is unconventional production is required to be reported monthly. I'll also add the disclaimer that there is no oversight. Whatever numbers they report or what they report, they can be changed at any time. Eventually I will have a paid seminar up that you can avail yourself of to learn how to get around those reports and maybe get information for your specific wells. So I created this report, which actually includes the top 100 wells. Normally I'm talking about the top 20 wells or so in the state. But for the purposes of that Southwest meeting, I've highlighted some things that brought up a few interesting points, I thought. This shows the top 17 wells, and these columns are taken from, I've manipulated them, some moved them around, but put what information I thought was important to fit on the screen. The columns are directly from the production report. However, this MCF per day column is one that I add, and that's million cubic feet per day, that allows you to compare apples to apples in ranking the wells. What I've highlighted in green is also what I've added. Ironically, the first ones I highlighted in green are Greene County. But this shows, I separated out the Southwest area from the Northeast. And the green ones are the Southwest area. And as you look down through this report, you can see it goes back and forth. And those two areas are the only ones that appear in the top wells each month. These pale ale wells that you see here on the top, and then as we go down the list, we see 3 more of those. And these are on the pale ale pad. They've remained to be top wells. The 2 top ones producing 38 and 37 million cubic feet a day. They've been on the top of this list for several months, so producing very well. All the wells in this report were spud in 2022 and 2023, so they're all relatively new wells, which of course is also not a surprise. So as we go down through, you see it goes back and forth between Greene, Susquehanna, Bradford. Now we see Washington pop in there. Bradford County, Susquehanna. There's Greene again. Greene has a lot of high producing wells. There's a Westmoreland sneaking in there, Upper Burrell Township, the Saline well. And now we're seeing that well's producing 22 million a day. Continuing down through the list, seeing the same counties over and over. There's Wyoming County showing up. They have a lot of high producing wells. And when we get down, interestingly, 69 through 85, these are all Northeast wells. And we see Susquehanna, Bradford, Lycoming, Tioga. And then 86 through 100, we're back to going back and forth between Southwest and Northeast, and there Beaver County pops in as well. Something interesting that came out of looking at these and actually looking at 100 of them, I always do some sorts to see if I find anything that stands out to me. And this is an interesting thing to know, I think, if you are an owner of oil and gas rights. So here you see the Barley Wine pad has 5 wells that are ranked 5th through 9th in the state for that month's production. And they're in Greene County, Jackson Township. So you see that these are, sometimes I get a question about wells on the pad. Each one of these has their own separate, distinct production. So you may be part of one or more of these if you're in those units, depending on how they are unitized. So you could be part of one, like I said, or more, but they're each individual. And so if you're part of multiple wells, you know that all these wells will be listed individually on a check. And now, thanks to some legislation that we worked on through POGLA, Senator Yaw introduced, it's not on here, but they are required to know individually these wells and report it with the API number, which allows you to distinguish easily between the wells. Now, going on down, this is what I thought was very interesting. You go on down through to 64 through 67 in ranking, or 64 through 66. And here's the barley wine pad again, 2, 4, and 6 H wells. And those wells are each producing right around 19 million cubic feet a day in September. I looked up some information, not exhaustively, but all of these wells are about 20,000 foot laterals. So not a big difference there. I did not look up to see if they are all separate laterals. They all go to the south. I did not look up to see if there were any differences in the formations that were encountered and produced. But what I think is the important thing for you to note as a royalty owner is, you know, they're all producing a lot of gas, but look at the variation. I mean, we've got 10 million cubic feet per day difference between these wells that are on the same pad as the ranking of 5, 6, 7, 8, and 9. So these wells are within, they may be within a couple of miles, or not a couple of miles, excuse me. It could be within thousands of feet, hundreds of feet from here, but they're very close. And we are seeing a very marked difference in production. So just because a well is coming off from the same pad doesn't mean it's going to have the same production. And so, as you're making decisions about how you're allowing the company to unitize you and like that, this is kind of important things to know. Okay, so this is all I'm going to say about the production reports this month. As I always say, the good news is that these wells are producing tremendous amounts of gas. And then if you're waiting for your well to be drilled, the bad news is these wells are all producing tremendous amount of gas because there's not necessarily a home for all of it. It tends to depress the price as they continue to develop the markets. But we follow it every month. It was noted that last year, I did look at DEP report about the 2022 report on the state of oil and gas in Pennsylvania. And one of the things to note was 2022 was the first year and since maybe, it's been over a decade that we've seen a decline in the production. But it was a small decline, but we'll see, how that continues in the trends. So the next topic I'm talking about today is let's see, I wanted to see if I could do both of these things at the same time, and I can. Okay. The next thing I'm going to talk about is the depletion deduction. And I'm going to talk about it because there's a couple bills out there in the House and Senate that have the potential to affect how you can deduct this as owner of oil and gas rights in Pennsylvania. I think I stopped sharing. Okay. So first I'm going to talk a little bit about the depletion deduction. Hopefully you understand it if you're collecting royalties. If not, here we go. So I'm not giving tax advice. I have this disclaimer down there. But I am speaking as someone who did prepare taxes professionally for a number of years and was an enrolled agent before the IRS. So I do have an understanding, although I'm going to say that I am not attending tax updates yearly. And so take this for what it's worth. This is the Schedule E on the federal return. And if you're collecting royalties or lease payments from oil and gas, then it's reported here on the Schedule E as rental income. And those royalties, you know, are included, listed out, and the depletion deduction is what I'm going to focus on. You know, there are a number of deductions consulting with your tax advisor that you can take if you're collecting oil and gas income that are legitimate. And one of them is depletion. And it occurs here on line 18 of the Schedule E. And it's pretty straightforward, particularly for royalty owners. You do have a choice between cost depletion and percentage depletion. But cost depletion, you're only going to be allowed if you have a basis in the property in the oil and gas rights. So if you bought it as an investment, that and then you can take the larger cost depletion or percentage depletion. But for, I would say, a very large percentage of people who own oil and gas rights in Pennsylvania, you're going to take the percentage depletion limits. Now, this, you know, I'm showing you this Schedule E on your tax return. If you are collecting royalties and you're relying on someone else to do your return, know where this is. Make sure that, you know, they are doing it correctly. Know what questions to ask, what to look for. You know, I've seen cases where, particularly if you live in a non-oil and gas area, you know, if you go to a preparer that's not familiar with it, make sure that it's getting the correct treatment. So the federal percentage depletion deduction of 15% is what we're going to talk about today. It's allowed against your oil and gas income. It's deducted on Schedule E. It's 15% of your gross royalty. And so I'll just throw this in. If your company is taking deductions, or if you are a non-resident, you live in another state and have rights in Pennsylvania, and they're taking out state tax, you need to examine your 1099 from the company carefully and make sure that the number that you're deducting this from is the gross. So if those things have been deducted from your royalty checks, make sure that what you're deducting this from is the gross, so you're getting the full benefit. And again, at the bottom, this does not represent tax advice. So again, you can deduct the higher percentage or cost depletion, but the latter requires a cost basis, which is most often very low or zero, depending on when you acquire the property and how. Now, Pennsylvania's percentage depletion deduction allowance is zero. Currently, Pennsylvania tax law only allows for the cost depletion method in calculating the deduction. So if you took 15% off your royalty on the federal, you cannot do that in Pennsylvania. And if you have done it, you will get a notice from the IRS saying that you owe that money back at this point. So thanks to one of our POGLA members and his work with Farm Bureau and POGLA, there have been 2 bills introduced in the House and Senate related to this. Last session, prior to 2023, there was a House Bill 199 introduced by Dunbar in the Southwest that didn't go anywhere. And then this session, 2023-24, Senator Bartolotta sponsored and introduced Senate Bill 654. It was voted out of the Senate very easily. I think there's only 1 vote against it. And now it awaits action in the House. It's a simple 1-page bill that would allow the same 15% depletion deduction on your PA Schedule E as allowed on the federal return. Now it's in the House. The House could concur on that and send it. Then it would go to the governor's office. This is, maybe not exactly the correct order on that, but basically. Or there's also a House Bill 81 that's identical to that. There has been some conversation as we discussed this with our lobbyist for POGLA versus strategies, that the House could amend either bill to send, and then they would have to send it back to the Senate for concurrence. But there is discussion on that. Currently, there's no action on either, but we hope to see that. So, what's next? POGLA is working to bring this additional tax benefit to landowners. Farm Bureau is also advocating for this. The House will make the next move and consider whether to concur on the Senate version or propose amendments. And, if you're a POGLA member, this is a plug for joining POGLA. POGLA members will receive a call to action if calls to legislators are necessary at a point where there's going to be a vote on it, or to push it to be considered in the House Environmental Committee, which of course is controlled by the Democrats at this point. And so if calls are necessary to encourage any votes to your legislator, we'll let people know. It's always good to have a relationship with your legislator. Let them know that oil and gas issues are important to you. So when these things come up, we have the support. So now I'm going to take a look. That's all I have for today, and see if we have any questions out there. I gave instructions for how to ask questions. I don't see any questions in there. Let me also look in the chat pod. Okay, I don't see any questions today. This will be available on YouTube as soon as I get it downloaded and do just a tiny bit of editing. And when you go to the YouTube site and look up my channel, you will also see all the previous broadcasts. You can listen to them in their entirety. And if you would like to subscribe to Speaking of Gas, if you go to GasWellGuru and the live webinar tab, you can log in or register with your email. I don't use this for anything but promoting my webcast and webinars, things that are relevant to you. You're not going to be bombarded with emails, but what you will get is an update the morning of the broadcast. You will also get any notifications of changes. I want to say it's possible that this day and time could change again from time to time as I settle into a schedule that works for me and for the audience. Actually, most people are viewing the YouTubes rather than live, but the live presentation does allow for questions. So thank you for tuning in today. Please consider joining POGLA, Pennsylvania Oil and Gas Landowner Alliance. and stay tuned for a weekly newsletter from them if you join. So thank you for tuning in, and we'll see you next week.